2022. We are in the midst of the biggest sell-off we've seen in a couple of years. For all of 2021, we only did about half this much of a pullback. Our deepest sell-off in 2021 was this one back here at the start of our bear fork, was from the September high down to the October low. And you can see now at this point we've more than doubled. I mean, we are on the way to doubling that down because that's what this fork measures in the first place. We've broken down below the median line, and it looks like we are headed to the bottom of the fork, which would get us down here to test the October low. All of our simple moving averages are curling over and facing down, except the 200-day. That's still rising, but it is beginning to flatten out. Perhaps the day that this completely flattens out, that will be the day the market will try to take a turn and move up, or perhaps it's going to try to take a turn on Monday now that it has sucked in all of these people short with a weekly close below the 200-day simple moving average. We shall see. We either just saw the biggest bear trap, or we just saw only the beginning of what's going to be much lower. I don't know, but let's talk about where we would go if we're going to go lower first. Okay, so initially we have an unfilled gap here at 43.63. It goes back here to the October 3rd close. Maybe we just make a little bit lower low on Monday and we do one of those famous turnabouts where we've sold off the entire week and we thrash it down just one more time off the open on Monday, but find some buyers and really wash things out. Maybe we fill this gap and even look a little lower below it to that 43.50 level and turn there and make our way back up. If we make our way back up, we've got to retake the 200-day simple moving average. Otherwise, we have no security. We have no support underneath us for a lot lower. If this 43.63 to 43.50 area does not hold us, then we're going to plummet all the way down here to test the October low. Right near the October low is the 10% off mark, 42.90. Below that is the October low at 42.78.94. And just below that is the bottom of our bear fork. Our bottom of our bear fork aligns perfectly with the equivalent low from ES because this low here in October was not as low as ES got down to in session. I mean, in overnight, the night before we went into this session here on October 4th. Coming into this day, that overnight session, ES got down to 42.60, and then in the light of the day, maybe only got down to within 10 points of that with the S&P before we turned and bounced. So now there's about an 8-point spread. If we see ES get down to 42.60, that means about 42.68 for the S&P. That would be about a 10-point look below the October low, and that aligns beautifully with holding this bear fork, or maybe even just poking a tiny little hole in it and looking below it and then reversing. Okay, so maybe that would be as low as we go until we see what the Fed has to say. And if the Fed scares us, we're going to head lower. And if the Fed delights us, then we're going to maybe try and bounce and take back some of our simple moving averages. Whether it's now or after the Fed, if we do head lower, if we break down below our bear fork, the halfway back point for this whole move from the, I'm pointing over to the left side of the chart here. This is the 2021 low. It was struck on the first trading day of the year. At 36.68 and change. What is it? 30. I think I have it right here. 36.62. Okay, that's the low for 2021. The halfway back from that low to our 2022 high, which is our current all-time high at 48.18 and change. That halfway back point is 42.40. So, if we don't hold the fork, maybe we just take a look below it to this 42.40 level. That is the halfway back point for this whole move. Looking back here to the left, once again, you can see, and maybe this will strike in your memory, we had a devil of a time trying to get through 42.50. We made an all-time high up to about 42.40 something in May, and then sold off. And then we made another attempt in June, and then sold off. And then we made another attempt in July and broke through it and traded way up above it, only to come back and back test it one more time with the July low. So a lot of stuff occurred here at this 42.40 level. If this doesn't hold us, there really, what is there to hold us up except maybe going all the way to the 4,000 handle back here where we were trading in June? I'm sorry, back here where we were trading in May, and testing and trying to hold open all these gaps that we left in our wake in the beginning of April. This back test back here in May held open this big set of gaps as well. Maybe we would come back down here one more time to try and test it, and if it doesn't hold and we break down below these gaps, it would probably be such a substantial clip that it might take us a long time to get back over 4,000 again. So just keep that in mind. I know everybody just dreams of having this chance to buy this dip, the dip of a lifetime, but getting down this low might be the market saying that everything has been overvalued for a long time, and it might take a long time to get up through this stuff. It won't be like the COVID sell-off that had a reason for that sell-off, you know, a finite thing, you know, a pandemic that could eventually be cured and we bounce back up again. This would be different. This would be saying that, you know, everything has been overvalued for too long, and it could be a sell-off that leaves us for a couple of years sitting here trying to get back over 4,000 again and failing. So I don't want to be that glum just yet. Let's concentrate on whether or not we hold or break down below the October low first, and then we'll address 4,000 later on if and when we get there. Here's the monthly chart. You can see how easy it would be to get down here to that 4,000 mark, and if we were to break it, I mean, that's a lot of work. That's a lot of work going all the way back to March, all the way back to the first quarter of 2021. Finally, let's take a look at our roadmap. Lots and lots of levels on here just below us that could catch and hold us, but ultimately that October low is a serious level. Let's see what happens from there. Maybe we bounce from there. Maybe we come out of the gate and game all these people from Friday that, you know, stayed short with this weekly close below the 200-day. I know a lot of futures traders that I follow on Twitter, they're like salivating, you know, they are just like dying to see this market go even lower. And it's that kind of mentality that fuels breathtaking dead cat bounces. So don't be surprised to see one of those take place before we really pound down even lower. The 200-day simple moving average is our friend or our foe. If we take that out, we are going to go higher. If we fail at it, we are going to go lower. It's very simple. The combination of Friday's close to the 200-day simple moving average, that's just sort of your moment of truth there. The 200-day went out at 44.29. It's still a rising level. It's starting to flatten out a little. Maybe it's going to be about 42.30, 31, 32, something like that on Monday. Maybe a little higher still on Tuesday. So that hurdle, that fence gets a little higher to cross as the week goes on. If we get over this stuff, then we just look towards the 100-day simple moving average. The 10-day is going to be coming down, crossing down through that come Monday. If not Monday, then Tuesday. So this 45.80-ish area, 45.70 to 80 area, that's going to be the spot to look towards if we get through the 200-day simple moving average. And that would be quite a bounce to trade with calls. If you don't want to trade the bounce, you just want to watch it happen and wait for your chance to get in on the put train once again, it'll be up here around 45.80 or so. That's what I think. If not, if we make it through 45.80, then maybe around 4600 to 4610, which is going to be the midpoint from our low on Friday back to our all-time high at the beginning of the month. Okay, hope this video helped you out. Hope this all made sense. If you have any questions, just shoot me a question at the private Twitter account. As always, good luck and good trading.